Hello friends, I am Dr. Awdhesh Singh and I welcome you to my session on goods and services tax today. I am an educator, I am an author, and I had been into Indian Revenue Service for 25 years. In Customs Central Excise Department, we were the agency who were responsible for enforcement of the Central Excise and Service Tax, which is now going to be merged and to become a goods and services tax. The CBEC, Central Board of Excise and Customs, which is the apex authority for the IRS officers, Custom and Central Excise, is the agency which is going to enforce the GST for the central government in the future also. So friends, today's hot topic is goods and services tax, and everybody is talking about it because this is considered to be the greatest reform in the history of independent India as far as the taxation is concerned. So we must be aware of what is there in GST, and so today's session I am devoting on that. So first of all, we should understand what were the tax provisions earlier before the GST has come, or whatever is present today. So you may be aware, friends, that there are basically three lists in the Indian Constitution. One is called central list, one is called state list, other is called concurrent list. So if the item is particular specific activity is mentioned in the central list, the central government levies the tax. For example, customs, import of goods or export of goods is mentioned in the central list, so central government levies the tax of customs. Similarly, in the excise, which is on the act of manufacture or production, central government levies the taxes. In the same way, when there is a sale within the state, it is mentioned in the state list, and therefore the state government levies the tax. On the entertainment, like when you go and see a movie, that is also in the state list, and state government levy the taxes. So all the items which are in the state list, they are taxed by the state government, in the central list, which is taxed by the central government. And if the item is mentioned in the concurrent list, then center and state both can levy the taxes. Now the problem with this earlier form of taxation was that suppose you are taking one particular business activity. For example, when you are importing something, then the central government is collecting the taxes. Then you sell it to somebody, then the state government collects the taxes. Then somebody manufacture it, then it's the central government collect the taxes. Then again you sell it, the state government collect the taxes. So what happens that in this process, you are paying taxes on the taxes, and this is the problem, that their taxes used to be multiplied. For example, if 100 rupees you pay 10% tax, then the next tax 10 which you are going to pay, you are going to pay on 110 rupees, and so it's going to multiply, and this is called cascading effect. Similarly, the second problem was that whenever the goods were transported from one state to another state, then the other state was not able to take the benefit of the taxes which has been paid in the previous state, so his cost was much higher. So what the constitutional amendment was required, and so what has been done is that a constitutional amendment 101 amendment was brought, and section 246A was introduced. By virtue of that, what happens that the goods and services tax was brought in the list of concurrent list. So both the state government and the central government can simultaneously levy taxes on goods and services tax. So unlike the earlier provision where the taxes were different in nature, like manufacturing separate tax, import separate tax, the sales separate tax, now all the activities of supplying goods and services or both are to be taxed as GST, goods and services tax, and the rate is going to be uniform. And so that is the greatest thing, that there is going to be one tax for the entire country, and so the entire country is going to become one market. So this is the first important thing, is you should know that constitutional mechanism, constitutional amendment was brought, and GST was brought in the concurrent list, and now the center as well as the state, both governments can levy the taxes. The second important point which you should know is that what are the items on which the GST is levied. GST is levied on all the items except the liquor for human consumption, the alcohol for human consumption. That is the item which is continued to be in the state list. All other items has been brought into the GST. However, the items, 5 petroleum products like petrol, diesel and all that, will be brought into the GST from a date which will be notified later on. Similarly, on these tobacco products, you are going to have GST as well as the central excise. So this is the thing, all other items are to be taxed under the GST. So this is the scope of GST. Now the third important point you should know is about GST Council. Now friends, earlier the state government had its own power to levy taxes, and you must be seeing that in the budget the central government will reduce the taxes or increase the taxes. In the same way, all the state government used to levy their own taxes. So the result was that every state was having a different taxes on the same commodity. Now suppose you are a manufacturer and you are supplying goods to all the 29 states and union territories, then what will happen that each state will have its own law, and you should know the taxes on each state, and that's going to be very tough for you to know as to what are the laws there. Now what has happened is that no state government or central government can change the rates of the taxes, because this GST Council has been made, which is headed by the Finance Minister of India, and all the state finance ministers are its member. And the voting and the whole thing will be decided on the basis of the weightage average, and basically the weightage 75% of voting has to be done to make any approval by the GST Council, and central government will not be able to make any law or make any changes without the GST Council approves for it. So number one, you should remember that 75% weightage voting is required. Out of that, 1/3 weight is there with the central government and 2/3 weight is there with the state government, and therefore if the law has to be passed, the central government plus 20 states has to approve it minimum, then only a GST Council can approve, and then only any change can happen. So you can expect that now every day the rate is not going to change. Whatever rate has been brought is going to continue, because GST Council is not going to change the rate very frequently. This is the third important point. The fourth important point is that you should understand is that now there is going to be a dual administration by the central government and the state government on every transaction. So every transaction which you are going to make, when you are going to make, you are going to pay the central taxes, central GST, and the state tax, state GST, and they will be managed by on behalf of the central government, the CBEC, Central Board of Excise and Custom, which will be now renamed Central Board of Indirect Taxes and Customs, CBIC. They will manage on the state government. These VAT officers or the cell tax officer will manage the taxes. And as per the agreement which has been done between the center and the state government, if the turnover is less than 1.5 crore rupees, then all the 90% of the assesses will be within the control of state government, and 10% will be in the control of central government. And if the turnover is more than 1.5 crores, then both the 50-50% distribution will be there for state and central government. So this is the way, but nevertheless only one agency will be, you will be going for refund, rebate, registration for things. But if suppose there is an information by the other agency, then other agency can also make the cases on the evasion. So this is one important point, that you should understand that now for every transaction there will be dual administration by central government as well as state government, but you will take only one single registration, and that will be used by both the governments. The fifth important point you should know is that GST is a destination based tax. That means, see, you understand, suppose in the excise pattern what was there, suppose a manufacturer was in Tamil Nadu, and Tamil Nadu this is manufacturing, then that local commissioner will get the taxes. In the same way, whichever state will manufacture, they will get the taxes. Whichever state the sale will take, that will take the taxes. Now in the new regime, it is a destination based tax. So suppose the goods are cleared from Tamil Nadu, but these goods are consumed in Delhi, then the Delhi government will get the taxes. So it is a destination based tax. Similarly, when the goods are produced in a particular state and exported, then outside Indian territory, then it will be, there will be no tax on that. It will be a zero rated tax. So this is an important concept we should understand, that it is a destination based tax. So whichever state it will be consumed, that state will get the taxes, not the originating state. Now in order to implement this, the government has brought basically three types of taxes. One is central tax, all called central GST. One is called state tax or state GST. Now whenever there is a the supply of goods within the state, then CGST plus SGST will be levied. Both are identical. So for example, if 18% is the rate, then 9% will be the CGST and 9% will be the SGST. So this is the equal rate which is going to be applied. But when the transaction is between two states, like from Tamil Nadu, suppose the goods goes to Maharashtra, Then IGST will be implemented, which is called integrated tax, and this will be equal to the central taxes plus state taxes. But this will be collected by the central government, and thereafter it will be the state GST component will be given to the consuming state, which is Maharashtra. So this is a very, very important point. You should understand that there are three types of taxes: CGST, IGST and SGST, and this state taxes will be collected in the form of by the central government, but it will be given to the state government. This is the important thing you should know. Similarly, in the case of import of services, also exactly the same amount of IGST will be collected as it is there in the local supply of goods or things. For example, if there is a television on which the rate of duty is say 20%, in that case, if you are importing something, then the custom duty, let us say, which is 10% has to be paid, and over above the GST, IGST of 20% has to be paid. So this is an important point. So whenever there is an import, also the GST will be paid. In the same way, when you are exporting, then the same GST will be refunded. Then the next point is that earlier, there were different rate of taxation exemptions. So for example, in manufacturing, in the central government, the exemption limit was 1.5 lakhs, 1.5 crores. In the state government, the rate was in every different state was different. But let us say in service, the central government used to give exemption only for 10 lakhs. State government rates will differ. Now uniform rate of 20 lakhs of exemption has been given to all the SSEs except on the SSEs who are in the specified states like northeastern state. For them the limit has been kept to 20 lakhs. So now you have to understand that there is a same amount of exemption of 20 lakhs or 10 lakhs for all the SSEs, whether they are producing goods, manufacturing goods, or they are selling, all the traders. So this is an important provision you should know. Then another important point, what is the benefit of GST, is that there will be free flow of credit. You see, earlier suppose the goods you have manufactured in Tamil Nadu and you send it to Delhi, then whatever taxes are levied or state taxes in the Tamil Nadu cannot be carried forward. Or suppose you are a manufacturer and you purchase something from the shop. On the shop only VAT is paid, and therefore you will not be able to take credit of the center tax, which is the state excise department. And so now everybody will be issuing the invoice, which is central CGST and IGST, and so everybody will be able to take the credit. And whether you are supplying the goods to Tamil Nadu or supplying the goods to Goa or supplying the goods to any state, the taxes will be same, and therefore the entire country will become just one market. And this is the greatest revolutionary step, because you remember that earlier there was, when there is an interstate sale, there will be CST of 2%, while the normal tax of will be set to 12% or 13%. So on every border there will be a check post, because there is a possibility that you clear CST, pay 2% and divert it in the local state. And therefore this entire thing will go, and the goods will be able to flow from one state to another state without any hindrance. So because the tax will be collected in the origin itself. So this is a very, very important point you should know. The next point, and ninth point, is the composition scheme. The government has also brought a very attractive composition scheme, and under this composition scheme, the traders and certain service providers can opt for this, and the rate of taxes will be just 1% or 2%. In the case of certain services, 5%. So suppose it is 1% of in the composition scheme, and this scheme is available only if your turnover is less than 50 lakhs. 50 lakhs is the limit. So suppose you are a small businessman and you are paying only 50 lakh rupees of turnover is there, then you don't have to maintain all this account and you don't have to pay the taxes at 18%, 20%. You can just opt for this scheme and just pay 1% of the tax on the entire transaction. And so you can understand this will benefit you tremendously, but you will not be able to take, number one, the credit on the inputs, and you will not be able to collect that 1% from your customer. So this is the condition. So if you go for the composition scheme, the benefit is that it is very simplified and you collect only 1% of the tax. So this is a very important. Then the next benefit is to the exporter. You see, earlier when the exporter used to export, then the central government used to refund them the taxes which are in the nature of excise or service tax. But as far as the VAT taxes were concerned, the process was very difficult for the reimbursement, because it is paid in the state government. And somebody purchased from the local market, let us say, it is very difficult for him to get the documents for excise payment or service tax payment or other payments. And therefore the refund was limited only to a very small amount. Now with this GST, the entire amount can be refunded. So if you are exporting, the entire state taxes, entire center taxes will be refunded, and therefore the export will become cheaper, and your goods will become more and more competitive in the international market, and that is likely to give a fillip to the Made in India campaign, because our goods will be more competitive in the international market. So this is also a very important point, that the exporter is going to get tremendous benefit because of this GST. Then government in this time, the 11th point, government in this time has brought a very important provision that they call is anti-profiteering clause. See, in this clause, what happens, that suppose the government reduces the taxes, or you are taking the input credit and you are not passing on the benefit to the customer. You are taking that as a profit. In that case, the government can take action against you. They can even demand the duty or the taxes which you have not passed on to the customer. So this is going to put the pressure on the supplier of the goods or services to pass on the benefit to the customer whenever there is a benefit which is given by the government. Then finally, friends, you should understand that there is something called GST and Goods and Services Network, which the government has created by spending thousands of crore rupees. And this entire process of the GST is going to be online. That means your registration will be online, you will be submitting all the return online, you will be getting the refunds online, your notices will be issued online. So entire process has been made online. And for that, we have created a GSTN, which is basically a government is having a 49% stake and 51% stakes is to the other people, and so it's having a nature of the private company, and therefore this company is going to give this network, and once the entire process is online, then the evasion is going to be tremendously reduced, and the physical interface between the taxpayer and the tax collector is going to be eliminated, and therefore the corruption is going to be tremendously reduced. So these are the benefit of the GSTN. So you can understand that this is the greatest reform which the government has done in the independent India, and it's going to be implemented from 1st July 2017. Let's all welcome that, and let's all make GST a success. With this, I hope that I've been able to give you the basic points of GST. I hope you like the lecture, and if you have any questions, you can ask me. Thank you very much. God bless you. Thank you very much.